IREN just delivered a 50-megawatt AI data center to Microsoft, and NVIDIA gave it a cloud status that almost nobody gets. For years ago, this company only mined Bitcoin. This is what IREN actually does, how a Bitcoin miner became one of Microsoft and NVIDIA's own cloud providers, and why its stock has swung between $18 and $77 in the same 12 months. On August 13, 2026, IREN announced it had delivered Horizon 1, the first of 4 50-megawatt, liquid-cooled AI data centers, to Microsoft at its Childress, Texas campus, and that NVIDIA had granted it exemplar cloud status after testing its GB300 NVL72 deployment. The stock gained on the news. But the most recent hard numbers tell a rockier story. In its third fiscal quarter, reported in May, IREN posted revenue of $144 million, a third below what analysts expected, and a net loss of $247 million, wider than the quarter before. A great operational headline, but it doesn't explain what IREN actually is or why its stock has been this volatile. IREN Limited is a publicly traded data center company, headquartered in Sydney, Australia, trading on the Nasdaq as IREN. It runs facilities across Canada and the US, with around 450 employees, a market cap that's swung from around $6 billion to nearly $28 billion in the past year alone, and roughly $7.6 billion in cash on hand. Its beta, a measure of how wildly the stock moves versus the market, sits above 4. That's an unusually small, young company holding an unusually large pile of cash and an unusually wild stock chart to match. IREN builds the entire stack itself. It started by developing data centers on cheap, renewable power, hydro, wind, and solar, originally to mine Bitcoin at the lowest possible cost. Now that same power and those same buildings house NVIDIA GPU clusters instead, wrapped in IREN's own AI cloud software for bare metal and managed compute. NVIDIA sits above it as both supplier and customer, running its own AI cloud contract on IREN's infrastructure. Above that, Microsoft, the anchor tenant, plus AI labs like Perplexity, Figure AI, Together AI, and Fireworks AI. IREN still mines Bitcoin on the side, but that's now the smallest part of the business, not the point of it. Here's how IREN actually got here. 2018, brothers Daniel and Will Roberts found Iris Energy in Sydney, building data centers on renewable hydropower in British Columbia to mine Bitcoin sustainably. November 2021, a Nasdaq IPO at $28 a share, raising roughly $232 million. 2023, with the AI boom accelerating, the company starts shifting toward GPU compute. July 2024, short seller Culper Research calls it a, quote, Prius at the Grand Prix, arguing its crypto-era data centers can't handle AI workloads. The stock drops sharply. November 2024, the company renames itself from Iris Energy to IREN. November 2025, a $9.7 billion, 5-year deal with Microsoft to run NVIDIA GB300 GPUs. March 2026, a 50,000-plus GPU order and a $6 billion stock offering to fund it. May 2026, NVIDIA signs its own $3.4 billion cloud contract with IREN and takes an option to buy up to 30 million IREN shares. And August 13, 2026, the first 50-megawatt Microsoft data center goes live, and NVIDIA hands IREN its exemplar cloud status. So what does IREN say comes next? By the end of 2026, the company is targeting more than $4 billion in annualized AI cloud revenue, with about 85% of that already locked into contracts. Capacity is the real race. AI cloud footprint is scaling from roughly 3 megawatts at the start of the year to 480 megawatts by year-end, then 1.2 gigawatts targeted for 2027, backed by 4.5 gigawatts of secured power. 3 more 50-megawatt buildings are due to Microsoft on the same Childress, Texas campus as Horizon 1. The through line converts secured power and signed contracts into delivered, revenue-generating data centers faster than anyone else building from a Bitcoin mining base ever has. So what's IREN's actual edge? It owns the whole stack, power contracts, land, construction, and operations, so it can build and deliver a 50-megawatt AI data center in months, the way it just did with Horizon 1. It's sitting on cheap, already secured renewable power left over from its mining days, the single hardest thing to get in this industry right now. And it has something almost no other Bitcoin miner-turned-cloud company has: direct validation from both of its biggest partners, Microsoft as its anchor customer, and NVIDIA not just as a supplier, but as a customer and shareholder in its own right. None of that is an accident. It's what happens when a power and construction company decides to become a cloud company instead of just renting from one. So how does IREN stack up? Against CoreWeave, IREN is far smaller. CoreWeave's backlog alone is roughly 30 times IREN's contracted revenue. But IREN is building its power and data centers itself, instead of leasing capacity like CoreWeave often does. Against Nebius, IREN carries far more legacy baggage. The Bitcoin mining business Nebius never had, but also far more owned physical infrastructure. And against the other Bitcoin miner pivots, Core Scientific, TeraWulf, Applied Digital, IREN is the one with a direct contract from NVIDIA itself, not just NVIDIA's GPUs bought secondhand. It's not the biggest Neocloud. It's the one that's building the most of its own footprint from the ground up. Co-founder and co-CEO Daniel Roberts put it this way when the Microsoft deal was announced. Quote, "This milestone partnership highlights the strength and scalability of our vertically integrated AI cloud platform. Confidence like that is easy in a press release. What it's actually built on and funded by is the next question. None of this comes without risk. There's the balance sheet. That $7.6 billion cash pile was raised largely by selling more shares, a $6 billion stock offering in March alone, and NVIDIA's own investment comes with an option to buy 30 million more IREN shares, meaning existing shareholders keep getting diluted. There's the track record. Culper Research's 2024 report pointed to a history of missed targets, including a hash rate goal the company fell badly short of, and insider selling by its own CoreWeave. There's customer concentration. Microsoft and NVIDIA together make up the bulk of IREN's $3.1 billion in contracted revenue. And there's the numbers right now. Revenue missing estimates by a third and a net loss that widened to $247 million, even as the announcements keep getting bigger. The bet is that the build-out outruns both the skepticism and the dilution. So why does any of this matter beyond one company's stock chart? Because IREN is the test case for whether a Bitcoin miner can genuinely become real AI infrastructure, not just repaint its buildings and call it a cloud company. The bull case, Microsoft and NVIDIA, the two most important names in AI compute, have each independently signed contracts with IREN and vouched for its infrastructure. The bear case, revenue that keeps missing forecasts, losses that keep widening, and growth funded increasingly by selling new shares rather than by the business itself. A stock that's swung from $18 to $77 in a year is a market that hasn't decided which of those is true yet. So which is it? The Bitcoin miner that outbuilt the AI cloud giants at their own game? Or a company whose promises are getting bigger faster than its profits are? Comment your take below.